Alright, what's up everybody? What's good, what's good, what's good? Hope everybody's doing well. Um, yeah, this is the start. This is the start. Um, I've been posting trades on my stories on IG and Facebook. People's been commenting, asking me, what is this? How am I making this money? Put me on, teach me, this, that, and the third. So that's what I'm gonna attempt to do. Um, I've never made a YouTube video or anything like this before, so just bear with me. I'm not an expert. But, anyways, I've been trading Forex and futures since roughly October. Well, no, I take that back. I take that back. Not even then. That's in October. That's when I Googled what is day trading. I had no clue what it was up until that point. I knew of the stock market. I knew of long term investing and things like that. But as far as day trading, no idea until October. So that one Google search has led me to here, to where I am now, to the things that y'all are seeing on my Instagram and Facebook story. So you might be like, oh, you've only been doing this since October. How are you going to put us on? I'm no expert. However, I do know how to learn and I do know how to self teach myself. And I also have had validation from people that has been trading for a while. I didn't know they traded. But I've reached out to them, and they reached out to me after seeing that I traded. And, they've been doing this for a year, 2, 3 years, 4 years, and we get to go back and forth. And they ask me where I am in my process, and am I being profitable? How much money have I made? And when I tell them how much I've made in these 3.5, 4 months, they're like, "Wow, you're already there." Like that took me a year to get to. That took me 2 years to get to, or I'm just now doing that. So, like I said, I know how to to self learn. I know how to analyze things, and I know how to look at things from the base level up. So that's what this series is going to be about. It's going to be about literally learning the bottom of the bottom and working the way up. I can get on here and be like, hey, this is the strategy. This is how I get into plays. This is how I get into trades. All right, y'all got it. Go ahead and do it. But that's not going to do no good for y'all. That's not gonna do no good for y'all. You're gonna lose your money. That's like telling somebody like, hey, this is how you drive. They never driven before. This is how you drive. Go get on I-20 and drive to Atlanta. It's dangerous. Somebody's gonna get hurt. This is the same. If I say, hey, this is my strategy, go use it, you're gonna lose your money. But anyways, we're gonna start with the very, very basics and work our way up. I don't know how many videos are gonna be in this series, but I'm gonna try my best to explain the concepts the best as I can. Use simple terminology, simple terms, and just try to keep it going from there and teach y'all, reinforce my learning myself while we do this and make money. It's that simple. Let's do it. All right, so let's get started. This is tradingview.com. This is where this is the website we'll use to analyze our charts. Right? It's free. Create an account. They have premium services that they may try to sell you, but for what we're doing, you don't need it. Tradingview.com, and then click on this search bar right here. And for this example, we're gonna use gold because that's something that I trade a lot. All right, so what we have on this screen is price action. Right, price action is defined by pretty much the asset moving back and forth between different price levels. Let me highlight this. Okay, so price is on the right hand side, right? All the way down here. These are different price numbers that gold has been or can be. And down along the bottom right here, these are dates and times. And right here in the middle, these are called candlesticks. There's candlesticks for every time frame. You have monthly candlesticks that shows the price throughout the month. You have hourly candlesticks that shows the price by the hour, 15 minute, 5 minute, 1 minute, all the way down to 1 second. But for what we're doing right now, we are going to focus on 5 minute candlesticks. All right, so first things first, terminology that you have to understand. Bullish means up. So think about a bull's horns. When they attack, they kind of swipe their horns up. Bearish means down. So think of a bear swiping down when they attack. I say that because like if you go off and look at other videos, that's a lot of terminology you'll hear: bullish, bearish, bullish and bearish. So bullish is pretty much like I said, we're going up. So these green candles means we went up. Price went up. Buyers were in control. Buyers are referred to as bulls. Sellers are referred to as bears. So this red candle right here, sellers or bears were in control. So green means up, green means bullish, red means down, red means bearish. So let's actually dissect the anatomy of a candle, right? Because that's important. If you cannot read a single candle, you will not be able to trade. Like this is the bare minimum that you must be able to do. So, all right, we have our body of the candle right here. This is a 5-minute candle, by the way. These candles will open and close every 5 minutes. This is the body of the candle. So, bullish candles usually open at the bottom and close at the top. So right here, this is the candle open, and this is the candle close. Now, I'm gonna zoom in some. You may see these little sticks right here. These little things right here. These are referred to as candle wicks, right? So what these indicate is in this time frame, the price or the level of this candle went this high before seller stepped in and pushed it back down, or the price of the candle went this low before buyer stepped in and pushed price back up. So with this candle, I'm just gonna read the candle how I would in real time. This candle opened here at price, what is this price? $4,904. It opened at this price. It sellers pushed it all the way down to 4,900. Once it got to 4,900, buyers pushed the price all the way back up to 49.16. And once it reached 49.16, sellers pushed the price back down to, what is this, 49.14, all within a 5-minute period. And that's essentially how you read a candle, right? This is a bullish candle. I just gave you the anatomy of a bullish candle. Just because these candles are red, the anatomy remains the same, except on a bearish candle, price opens at the top and closes at the bottom, right? So as you can see on a bullish candle, price opens at the bottom but closes up here, right? We increased where we opened at. On a bearish candle, we decreased price from where we opened at. Price opened here at 49.07 and closed at 48.98, right? So we decreased. Sellers won this one. So a green candle means buyers won that candle. A red candle means that sellers won that candle. So I kind of want you to see how this will look in real time. All right, so I jumped up to the 30-minute time frame, and I'm just gonna show y'all how it would have looked in real time with this candle playing out. Right, so we open up green, it flips red, buyer step in, seller step in. It's just like a big tug of war in real time. That's all it is. Looks like it's gonna be a red candle. Keep going, and it closes green. So this is how the candles look in real time. They don't move that fast. Well, these bigger candles don't. The 1 second candles do, but the bigger candles, they kind of just pop back and forth like that. So let's jump back down to the 5-minute time frame. Another thing that I want to show you with the candles is kind of like the correlation to open and close. So we discussed that a bullish candle is a green candle, and it signifies buying, right? So if we look at, this was our example candle. If we look at the candle that was opening and closing previously to this one, you can see that it closed here, and the next candle opens exactly where that one closed at, right? That's how price works. Regardless of if it's a bearish candle or a bullish candle, price will always open where the last candle ended. If it's not the exact price, it'll be close, right? So we had a large green bullish candle right here, and then the bearish candle opened up right here, went up, and pushed all the way down, right? So like I said earlier in the video, this is important. This is the overall fundamental basis of how to trade. You have to be able to read candles. You have to be able to understand the wicks, right? So I'm gonna go over one more example of a candle type. So we have these two candles right here, right beside each other. You can tell that, they're slim, they're skinny, they're basically just a big wick. These are indecision candles. If you look at these candles right here, you can clearly see that the bears won. Selling price won this candle. You come to this candle, you can clearly see that the bulls won. Buying power won these two candles right here. And like these big ones, you can clearly tell who won. These candles right here, these are called pretty much like indecision candles, right? They're just a full wick and then the body closes in the middle. This just means that this entire candle was just full of buying, selling, buying, selling, buying, selling, buying, selling. And at the end of the 5 minutes, it closed small and in the middle because no one won. Like it was a draw. That's what these two candles mean. So these are indecision candles and these are full on sellers won here, buyers won here. All right, so I'm getting ready to wrap this video up because I don't want to put too much on you at one time, but I'm stressing the importance of being able to read a single candlestick because the next video builds on being able to read a single candlestick. So I have some homework for you. It's nothing crazy, right? Like I said, please create a TradingView account so you can get in here, look at these charts. And what I want you to do, it doesn't matter what asset you do it on. It can be gold. It can be, in this search box, you can type in Meta for Facebook, Google, or Netflix. It does not matter. All the candles look the same, and they all tell a story of price, where it was, where it was, and potentially where it could be going. So the homework that I have for you is to just find an asset and go in here and look at these candles and identify it. Use this video as a reference, right? Use it as a reference. Green is signified by buyers. Green means bullish. Red is the sellers. The sellers are bears. The buyers are bulls, right? So go in here, pick a time frame. It does not matter. You pick your time frames up here at the top left. And what I want you to do in the comment section of this video is say, Tevin, I looked at this particular asset on this date right here. The dates are at the bottom, right? On this date right here, I identified this candle at this time. This is a bullish candle, or this is a bearish candle. Price opened at here, right? Your price correlates right over here to the right side. Price opened here and it closed here. We have wicks at this price and this price. Do that for a bullish and do it for a bearish candle. Leave your results or your homework, like just type it up in the comments and I will go check it for you. Like if it's right, I'm gonna say, hey, good job, that's right. If it's wrong, I'm gonna let you know it's wrong and kind of give you some advice of how to look at it, or say, you said it opened here, but it actually opened here. You said this was a bullish candle, but it was actually a bearish candle, right? Just something simple to get you on the charts and get you used to looking at these candlesticks. All right, so yeah, that's it. This is episode 1. I appreciate it. When this one comes out, by the time this one's uploaded to YouTube, I'll probably have 2 or 3 other ones recorded that I'll be editing and get ready to release right after this. But this is the start. This is the start. All right, see ya.